All right, so market's kind of on a win streak right now ahead of that Fed decision. Big moves for the NASDAQ especially, up about 5% week to date. In your mind, is that confidence that we're going to get a cut, or the confidence that we're going to get that 50 basis point cut that still technically is on the table?
I think some of it is actually a rebound from the sell-off we had in the NASDAQ and in other markets whenever we had that weaker economic information back in July. And so if you look back over that longer time frame, the market's been struggling a little bit with how to interpret these upcoming rate cuts. 25, I think, sends a message that it's all about inflation and we're getting back on track. In my opinion, 50 would have to be justified by acknowledging some weakness in the labor markets, and that's not something I think that equity investors should want to see. But you're right, the NASDAQ is powered through, and that's on the basis of strong earnings and strong margin growth from a lot of the companies in that index.
You know, it's funny you talk about earnings. LSEG, they are formerly Refinitiv, they put out their earnings estimates for 2025, and you're actually paying really close attention to it. So their estimate is 15% EPS growth next year. You have a considerably lower number. You're at 9%. So how does that shape your view of equities?
Yeah, so I still have a favorable view on equities. You know, 9% earnings is a pretty strong number that you can hang your hat on as far as future returns. I think some of the streets
considerably lower, though. Considerably lower.
Yes, it is considerably lower, and it's on the basis of a slowing economy. So we think the economy is headed back to long-term trend growth rate of 2%. Historically, that puts you at about 7 or 8% earnings. And we think there's some margin gains to be had on top of that, which gets you to 9 or maybe 10% if those margins come through a little better. 15, I think, is an achievable number, but it requires the cuts in interest rates to come sooner rather than later, and for the economy to perhaps see some reacceleration to levels around 2.5% or higher, which we think could happen. Okay. But currently, our baseline forecast is 2% on the economy, which leads to about 9% in terms of earnings.
So with all that in mind, right now you're saying that you're seeing a lot of opportunities when it comes to the healthcare sector. It's lagged. I mean, it's had a good year. It's up 14% year to date, but still lagged the S&P. If the economy is slowing, in your mind, why does that create opportunities in healthcare?
The opportunity in healthcare is mainly on the margin side. So healthcare is one of those sectors that has not recovered to its pre-pandemic margin levels. There was, of course, a lot of disruption in that sector during COVID. There's still been some hiring challenges and things like that. It's an area that's been continuing to add employment. But we think there's the potential for a lot of margin gains in healthcare. It's a very intensive services area in terms of labor usage and things like that. There's a lot of opportunity for deployment of technology, not only AI, but also robotics to help bring down costs in that sector and improve margins. And so we think they have the chance to control their own destiny in a sense, boosting earnings through better productivity.